And then suddenly there were these fintech lenders, and the traditional market, and I'm talking accountants, professionals and lenders, all sat there going, these idiots don't know what they're doing. they're lending money on an algorithm. What's an algorithm? They're a business owner who's passionate about their business. They're going to talk uninterrupted for 10 or 15 minutes, and I'm making those. And I'm going to get most of what I need to know as a broker or a lender from that conversation.
I heard stories of a pilot who was delivering for Tesco's and just doing all sorts of...
A good friend of mine runs a publishing company. He's currently getting his HGV license.
Fantastic.
And he's happier now.
Today, my guest on the Digital Ventures podcast is Steve Richardson from Reparo Finance. I wanted to find out how the lending industry has changed over the years, how the pandemic has changed the way that businesses have access to finance, and how technology has changed the landscape for businesses and lenders. Let's dive in. Steve, thanks for coming on to the podcast.
Thank you for having me.
So today, I really want to talk about the finance industry, B2B lending, where we're at now and where we're going, and just your thoughts on how things have changed and kind of what we should expect in the future for lending. Tell us about where we're at the moment with B2B lending.
Okay, sure. So one of the big challenges that our market seems to be facing at the moment is customer expectations. So obviously there's been huge challenges for all UK, especially SMEs, but businesses in general, due to the COVID pandemic. How that affected our industry was in two pretty big ways. So fundamentally, many businesses who were used to borrowing money to service cash flow and working capital could no longer access that money due to criteria. So your accounts and your historical data don't mean anything anymore. Many of those businesses couldn't trade as they were. So that was a huge challenge. Now, the government came in with C-bills and bounce back loans to meet that challenge. And it was a good thing they did, by the way. It was actually very, very, even though it ate a lot of our market up, I don't think we could have met that demand by any stretch as the alternative lending sector.
Because the criteria has all gone to...
We would have to have still stick to our criteria.
Right, okay.
Just because the market's in a bit of a challenging situation, you can't start, ignoring all your own historical lending rules. Now, that lending the government backed did solve a huge problem, and that was great. But what that's now led to for us today is customer expectations are now tied to C-bills and bounce back loan.
In terms of the ease of getting access to it?
Well, cost and security.
Got you, right.
So the big ones we are still getting now is, well, there was no personal guarantees needed for C-bills under 250,000. Almost every alternative finance lender will take a personal or director's guarantee for various reasons. So there was none of that, but also pricing expectation got dragged all the way down to almost high street costs.
Right, okay.
So those have been two big challenges for the lending industry. Obviously, getting our criteria to the point where we understand. So every deal we underwrite now, we have to look at it and go, what's been the COVID impact and what's the future potential impact?
Okay.
And obviously, none of us know what's coming in that sense. But yeah, now we talk to customers on a daily basis who are wondering why they can't now have the high street pricing when they might be loss making.
Sure.
They might be only recently trading and so on. Now, some of those businesses wouldn't have qualified for C-bills, but that doesn't stop them wanting that type of product.
Yeah, sure.
And the challenge with us at the moment as well, that kind of goes hand in hand in that with is customers' willingness to invest in the future of their businesses when none of us know what the next 6 months holds in terms of, I don't like throwing words like lockdown around because it was overly used anyway, but restrictions could be applied at some point. So I think we're seeing a lot of that. It's also still a crowded marketplace. There was a huge influx of lenders after 2008. In particular, between 2012 and 16, we saw a massive increase in the amount of lenders that offered a variety of products, be they selective invoice finance, micro transactional loans, even sort of pseudo credit cards.
Interesting. So on that note, then, in terms of that pivot into all these different weird and wonderful finance products, that surely has changed the role of Reparo or maybe other lenders who use very strict criteria. How has that sort of even more alternative lending affected the marketplace then?
Well, the main thing that that it's impacted is the speed of getting money out the door.
I see. Okay, yeah.
So technology has, and if that's what you were alluding to, is how have these things impacted? So all these new lenders coming in, originally, if we go back pre-2012, there were no business loans outside of the banks.
Yeah, absolutely.
I did my first 14 years in my career in asset finance.
Right.
And there was asset, there was invoice, and there was property, and the banks did loans. So I would have people coming in, I need a loan. And it's like, well, you actually dial it back, and from what you told me there, you actually need invoice finance. Right. You need a revolving credit line, whatever. So there were no loans. And then suddenly there were these fintech lenders. And the traditional market, and I'm talking accountants, professionals, and lenders, all sat there going, these idiots don't know what they're doing. They're lending money on an algorithm. What's an algorithm?
Right.
There was a lot of people Googling.
This is what, 2012?
Around then. I mean,
Some
of these lenders had already started, but
sure.
I was still a broker in 2012, and I remember the first meeting I had with someone about selective invoice finance. And actually, it was the first time anyone had ever told me about merchant cash advances.
Right, yes.
And I remember the
good old merchant cash advance.
I kept going back so it's on the card machine. It was like a time loop. Yeah. I just kept going, wait, what? So, and it's just another form of receivables finance.
Of course it is, yeah.
So all these products popped up, and a lot of people went, they're all going to go wrong. That none of these are going to work. Mm-hmm. And then slowly, as their market share diminished and the fintech's market share increased.
Because it worked.
Oh, yeah.
They got paid back. They actually got their money back.
Well, yes. I mean, they had healthy write-down allowances, so they knew they were going to get a significant percent of bad debt, but they accounted for that.
Sure.
It's like anything. As long as you know it's going to happen, you can't necessarily say it's a bad thing. Mm-hmm. So, in particular, and obviously we can name names, people like iWalker and Funding Circle, I mean, they almost redefined our market in a very short space of time.
Because of this algorithm?
No, well, yeah, because their use of technology was far ahead of any other lender, even the high street banks. Their adaptability, their lack of traditional lending bogging them down. They were almost looking at it with a fresh pair of eyes. Mm-hmm. And they were saying the reason 2008 bit as badly as it did is there wasn't enough access to capital.
Sure.
Because once the banks stopped lending, no one had any money to lend. Whereas they're saying, well, take the banks out of this. We can get money from all these other areas, and we can deploy this capital to SMEs, many of whom were viable businesses that were bitten by a crisis they had nothing to do with.
Sure.
So that forced all of us in the lending industry to take a step back and go, oh, okay, this stuff actually works. And to go back to one of the challenges we face, the addressable market for our products, which is really SMEs, mid-corporates are well served by the banks. There's been a massive overestimation of how many of them there are that can actually borrow money. You hear people go, there's 6 million SMEs in the UK, but only about 1.5 million of them have more than one member of staff.
Right, of course. That's a huge chunk.
Well, you've got millions of sole traders, right? So, and they don't really qualify for lending, and nor do they usually need it. So then you've got this 1.5 million. Well, how many of them are willing to borrow to keep the business going or grow? And then how many are willing to pay pricing that might be outside of what they consider to be expensive or cheap or whatever it might be? So there's a huge education piece that our industry is trying to do. There's no unified voice, right? We're all shouting in different corners of the market. But yeah, so I think the introduction of new products, so very innovative products, by the way. And
let's tell us about some of those, sort of, without naming names. What kind of?
I think we're allowed to name some names. It's
okay,
free press for them. I mean, we don't do their products, so it's fine. Well, merchant cash advance is a great example.
Sure.
Now, I had the benefit of working for an MCA lender for a couple of years, and having also dealt with them as a broker. when I was at Funding Options. And for me, it was such a simple idea. It was like you take this very historic receivable and you lend on it. And you cut off the customer's need to repay you by taking the money from the source.
Yeah, less friction, right? Yeah, less friction with the repayment mechanism. Yeah.
But you service a sector that the banks never really wanted to lend to, and most couldn't, because they don't make a lot of profit. You know, a lot of a lot of hospitality businesses are lifestyle businesses, so there's very small margins, and they often will operate from a P&L point of view on a loss. So there's this disconnect between what banks consider a healthy business and a lot of the hospitality sector, but they would turn around and go, but I don't need to do monthly MI, and I don't need to hold back, you know, EBITDA and cash reserves and so on. So suddenly there were these lenders going to these businesses going, no, you're ideal for us. We want to lend you money. And, you know, is it cheap? Is it expensive compared to what? You know, I mean, how many of those businesses could go and get a 5-year term loan from their bank? Not many. The small business overdrafts used to serve them very well, but they went away in 2008 and I don't think they're ever coming back. The other side of that is selective invoice finance or pay-as-you-go invoice finance. You know, market invoices, they used to be called. They're now market finance, I believe. They were one of the first to market, but there's a lot of small players as well who will go into a business that has B2B receivables, so business-to-business invoicing, and will say, okay, you don't need a full-on factoring facility, which for many years had a bad reputation as being expensive.
That's right.
And very restrictive. You don't need any of that. If you just need 50K, you've got, you know, 100K worth of invoices right there. We'll give you 70K against those right now. You sell them to us and we collect them in, or, you know, however you want to work it. They've got to the point where you can almost do that online now.
Right. So again, the whole technology piece there.
Open accounting. So we talk a lot about open banking. We'll come to that, but open accounting is another piece of that puzzle. So if you're doing a selective invoice finance line, your bank statements don't really matter to them. It's all about your aged debtors, creditors, and your accounts. So having a Xero integration, for example, and having, or Sage, QuickBooks, there's various software suites for accounts. They're now partnering with lenders.
Yeah.
So
which seems now quite obvious to do now, but obviously back in the day, it probably wasn't, right?
Well, there wasn't. I mean, you know, we talk about technology, and we have to remember that a lot of what we're working with now wasn't really around then.
No, true.
You know, I mean, a lot of businesses were operating on. Well, I think back to when I started. I used to send proposals by fax. So, you know, the idea of being able to share data seamlessly with a lender. I mean, I'm showing my age, but, you know, these are relatively new ideas, and business owners are getting younger, and that's the key. So, you know, and I might bounce around a little bit here, so please rein me in if I do. But one of the things that open banking has seen is a lack of uptake from business owners to use open banking today. So one number I got from an introducer we work with was only about 20% will actually click that button that says
to opt in for open banking and to share their transactional data through.
Correct. Now, whether that's because there's a lack of education around it, and I know some people who lobbied for open banking who always said the biggest challenge is going to be that the banks aren't particularly keen on it, so they'll never help educate. And your best case is the banks don't make it look scary when you're doing it big red flashing.
Yeah, sure. Yeah.
But really, a lot of business owners are kind of unaware that it's a read-only access. No one's going to go in your account. They can't go in and do anything. But business owners are getting younger, and you know, I'm aware that I'm becoming more comfortable with digital in my own my personal space. You know, I've now got a Monzo bank account, and I've had it since they were in beta, and I've used open banking myself personally for insurance and various other things. And I believe now they're trying to rebrand it to open data as well, because open banking didn't catch on. So it's now seemingly open data that we're talking about.
That's interesting.
But from a lender's point of view, we look at these things and go, okay, what can we take from that that's going to make our jobs easier and make our customers' lives easier?
But it's all about how the wider sort of business owner is made aware of these things, right? You mentioned cash advance. that wouldn't have been possible without sort of the whole adoption of like card terminals and people paying more via card. Back in the day, people still, doing a lot of things with cash, and even as recent as the sort of the late noughties, where people still, I don't know if checks were available then. I don't know if people were still doing checks.
I remember opening my first business bank account and getting a checkbook.
Yeah,
and it went in a drawer, and it never
came out, right? But obviously, that merchant cash advance only really works if you have a vast majority of your receivables, your payments going through the card terminal. So it wouldn't have worked without that adoption. So there is like a sort of an earlier stage where consumers have to adopt that paying by card sort of culture for it to work. So we talked about sort of how sort of people are using algorithms and technology to sort of change the way they lend money. Where does Reparo fit in with this in terms of your product? How's your product different from other B2B lenders?
That's a good question. So in some ways it isn't. I mean, ultimately we all lend money and try and get it back. And how we do that and how we differentiate from each other is always in the detail.
Sure.
So
in the underwriting,
but also in the offering, in the marketing, how you acquire business will differ.
Sure.
So there are people who just do asset finance, and there are people who just do invoice finance, and then property finance, and then you've got this very broad market now of people who provide working capital loans, and we're in that ballpark, right? So there are some who only do micro-transactional loans, so under 25k, and some who do under 50. Our challenge is, because we're quite broad, it's finding our niche, and we're still working on this. But the thing is, Reparo is quite young. So
when was Reparo established?
7 years ago, give or take, I think. I joined 2 years ago, and they spent the first 5 years just proving we could lend money and get it back in.
Right.
Proving the model, proving the concept. And I joined, obviously pre-COVID, with a mandate to build a national kind of business development team to scale it. Now, most lenders do this in a very traditional way. You go out and you engage with brokers, banks, other lenders. However, and that's all fine. But what COVID taught us is, if those brokers go quiet because they're not getting anything in the front door, you almost need another string to the bow. So what a lot of lenders do is they also have a direct acquisition model.
Got you.
Where they'll go direct to the business owners.
Sure.
So we're dipping our toe into that. We're not married to it. We're just looking into that. But to answer your question, how do we differ? We embrace technology for our onboarding experience, but we still believe in human underwriting for our final credit check. So we'll use open banking, and we do use open banking to qualify. We will use platforms to qualify. So we're almost an APIs. We use several that will feed in, Companies House, various agencies. That'll give us an idea of, okay, it looks like we can help you. Here's an idea of what we might be able to do. If you're interested in that, that's where we take them offline. Now, crucially, many of the digital fintech lenders will take that online journey and they'll go all the way to payout.
Is that surely that for any lender that's the utopian view, for not having to have human? That's obviously not always the case, but taking them from the initial application all the way through to funding, that's difficult to do.
It is, and many of them counter that difficulty with a healthy write-down allowance.
Okay,
because they assume, okay, well, we're not eyeballing these people. We're going to lose a lot of customers.
But it means they can scale.
But they can scale. But then also you have to remember that depends on, again, what your product is. Our unsecured lending, which is by that I mean there is no physical properties or anything securing it, is short term, and so are many of our peers. Okay. So if you're doing a 12-month facility to a business, you're not asking how are they going to be in 5 years. You're asking, are they still going to be here in 12 months?
In 12 months, right. Yeah.
Which sounds a bit cold, but kind of what we're paid to do is look at it and go, well, what are the risks here? Do we trust the people behind it? That's a big one for us. Now, you can't do that on an algorithm.
No, true. But what's that based on, though?
Usually a conversation.
Okay. It's interesting.
I'll give you an example. When I was a broker, I used to pick up the phone to a new prospect customer, and I wouldn't ask anything other than, can you tell me in your own words what you're looking to achieve? And then I'd shut up, because they don't want to hear from me. And if they're a business owner who's passionate about their business, they're going to talk uninterrupted for 10 or 15 minutes. And I'm making those. And I'm going to get most of what I need to know as a broker or a lender from that conversation. I'll understand what it is they're actually doing with the money.
Motives.
Yeah. No one borrows money for the sake of it. There's always an end game, and understanding their need and what the end game is helps us understand whether we can help them, whether we're appropriate. But also it removes a few objections too. So, it's expensive, or and it's like, well, you're doing this with it, and you've told me your margins are this, which means you're going to make this. So is it expensive? And I'm not going to tell him it is or it isn't. This is up to him. It's their business. We just try and guide them into that kind of thinking.
Sure.
So for me, that human touch is kind of important still. And I don't disagree with those whose business models are truly fully digital. That's their business model. We believe in a hybrid model. Some are completely human still. Some don't want to embrace any technology. I'm not going to name any names, but I know of some who are waiting for all this open banking to go away. And I keep saying that's like waiting for online banking to go away, or, it's not going to.
So with all this, I mean, it's a really good point, like, in terms of how tech's replaced some of the human element, and how you at Reparo are still find that human element, that person-to-person relationship really important. In 10 years, 5-10 years, is the human element still going to be as important with all, as tech gets better, as APIs get better, as more data is we're able to access? How much of that human element is going to be here to stay for good?
I don't know. Hopefully some of it, because it's sort of my job. There'll always be room for soft skills.
Sure.
I had this conversation I'm kind of interested in the AI industry. Not that I'm in any way qualified to be. I just find it interesting. And one of the conversations I heard on the podcast was, there's actually now a lack of soft skills in business in general.
Yeah.
People's ability to have a meeting, have a conversation. Until a business is run by AI, there's going to be a need for people to talk to that business owner. Another way of putting it is, if you're borrowing 25K, you'll do it online, right? Would you take out a mortgage without ever really knowing who the mortgage is with or what the terms were? I mean, mortgages are very safe lending, right? But one example I gave once to a CEO of a lending business was, the minute they want more than 50 grand, they pick up the phone.
Yeah.
And that seems to still be sort of true, is that, you've got to remember that most of us in the lending market aren't high street names. So most of us, they've never heard of. You go and ask your average man on the street to name 3 alternative finance lenders in the business sector, most of them won't be able to. Even business owners would struggle to name more than a couple.
Sure.
Probably Funding Circle, maybe a challenger bank outside of the high streets. So we are doing a lot to try and build trust with these people on day one. So it's all well and good being able to give them the technology and the online journey and the UX. That's great. But at some point, they're going to go, who are Reparo? They're going to say the same of most of us too, by the way. So, even those who think of themselves as being very successful, I imagine most people don't know iWalker. But I do, and everyone in our industry does. We see them as, they did really well with the digital implementation. But most businesses will go, well, who are iWalker? So they'll go and thankfully many of those businesses have got very good Trustpilot, those kind of things. We've always been quite slow on deploying those sorts of customer. I mean, I'm trying to build that right now. I'm trying to get more of our customers on our website, get more quotes, more testimonials, because we've actually got really good feedback from customers. But nobody knows that because we haven't made a big enough effort up until lately to try and drive that. So will there always be a need for people? Yeah, I think so. Is it a utopia to lend money end to end without the need for people? Probably for the shareholders, ultimately, of the businesses, then, yeah, because there's no human cost.
But maybe not for the business owner, or maybe not for...
Well, not for the business owner, but also if lending money isn't all about getting money out the door, it's about getting that money back in. You try getting money back in with an AI. You try getting money back in without a person. The minute someone's collecting a book in, they put people on that.
Yeah. Because soft skills are important in those types of roles.
You're talking to businesses who might be in distress.
Yeah, sure.
And often it's the person you're talking to whose livelihood is about to walk out the door with that business. And if you don't know how to do that, then you're going to have some challenges. So to put kind of a full stop on that, I know of a lot of the fintech lenders who they just write it off.
So it's much easier to write it off than it is to...
They'll never be able to pursue it because they've not got a relationship with the customer, and they probably haven't done enough due diligence in their digital journey. And I'm not, this isn't me throwing any shade at said lenders. They do what they do, but we ask all of our guarantors to take an ILA with independent legal advice. Now, we're kind of unique in that. Not many do it, even on an unsecured lend. And some would say, well, why'd you do that? And our answer is we actually commissioned research into this because we knew why we did it, but we wanted to prove it. I think it was nearly 46% of business owners didn't understand what a personal guarantee was. And I can send anyone that needs it the link to this. It was independently done, but they all had a very different view of what a PG or a director's guarantee was. And I'm thinking, these people, if they go on a digital journey, they're signing one of those, and they might not even know
what they've signed.
Now, for the business owner, when it comes to the crunch and it's gone legal or the business has failed, if the business owner can turn up and go, well, I didn't know what I was signing, the lender's probably not walking away with anything out of that. So, it's benefiting the customer. We want them to understand it because we want them to walk away if they're not comfortable.
Yeah, and you want to be paid.
And we want to be paid. I mean, at the end of the day, we lend money to get paid back.
That's right. My 8-year-old said the other day, Daddy, I liked it when you had all black hair. And I said, what do you mean? What are you trying to say? He said, you're starting to get a lot more grey. No, white, she said. A lot more white hair. And she said, does it mean you're dying? I went, no, it does not mean I'm dying. It means I'm aging.
Yeah, which is sort of the same thing.
Yeah, but very slowly dying.
Yeah. I was sat, Elliot was on my knee this morning watching CITV, and he was absentmindedly just doing this on my beard.
Yeah.
Oh. And it's like one of those things that I can never shave it off because it's the thing. If I ever shaved it off, they'd be like, who's this
man in that house?
Yeah. And also, I'd look terrible without it, by the way.
Have you always had a beard?
I've had some form of very short beard since I was in my mid-20s, so a long time now. And I grew it properly in a couple of years ago. Before lockdown, though.
Right.
It wasn't because of lockdown. I already had it. But during lockdown, it got Robinson Crusoe. It was really, really, and I had the mullet too. So I went to my first haircut.
Oh, nice.
The girl who cuts my hair, my first haircut, she went, "I love it." She's like, "You've got a proper mullet." Because I'd styled it too. It was like it had gone like really back. I looked like Riggs from Lethal Weapon.
That whole lockdown thing with the haircuts. I've seen some atrocious.
Well, my boys' hair got, because they won't let me cut it. It got ridiculous. They look like Herman's Hermits, which is a reference for anyone over the age of 50. And I'm not even the age of 50. But yeah, they had the big kind of like Paul Weller style hair, which was interesting.
So the whole lockdown thing hopefully is over. Who knows?
I think he's doing a press conference today.
Yeah, it's about the winter plan.
Yeah. So I mean, we've obviously, you can't not talk about it these days.
No. It's the whole era of people. So it was the year that it's the lost year, isn't it?
Well, they talk about it being once in a century and all that kind of thing. I hope it is, by the way.
Yeah.
But it's really interesting when I talk to people now in business and outside about, people seem to have different fears of the future for it. And I think more people are afraid of restrictions than they are of the virus now they've been vaccinated.
That's right.
Obviously, there's going to be exceptions to that, but there is definitely a growing amount of people who, are more comfortable now. We've got so much immunity, but are also aware that the NHS is run sort of on a shoestring, and too much pressure on it needs something to dial it down. And thankfully, it seems like all of the government have their MO of leaking to the Times, the Telegraph, the BBC, what their plans are. And I'm sure they have a lot of contingencies, but it sounds like everything is based on, if we do need to take any measures, and that's if, it will be more contingent on booster shots, masks, and maybe work from home.
Rather than lockdowns.
Again, though, that word was overused. We were actually in lockdown for this long, but then we had restrictions for this long.
Yeah,
and I had people saying, "Oh, we're still in lockdown," and I think we were still only allowed to eat outdoors.
I remember this.
And I'm like, that's not a lockdown.
That's not a lockdown. That's not a lockdown.
Well, the press loved the word, right?
Yeah, of course, yeah.
So people just took with it. But for me, I've always felt like, there has to be a balance. There has to be a balance. I mean, the NHS is funded out of taxes, so there has to be some economy to pay for the thing. I would love for this to spin off into a bigger conversation about funding of the NHS. And obviously, there's now been a very controversial hike in national insurance to, in some way, pay for
That's right.
The backlog and social care. I don't expect this government to pick up and run with a bigger conversation about why is our NHS always at breaking point. I've got friends in other countries, in Europe and others, that they do pay a higher percent of tax, but they get a much better healthcare for it.
Yeah, much better system.
Yeah, and I have twins who were born 10 weeks premature. They spent 7 weeks being looked after in St. Mary's. And after that, I had a chat with a guy in America who told me about a guy he knew who had similar and what that cost him. So
I can imagine.
I seem to recall a figure of $250,000.
Yeah, I can imagine.
And it cost me nothing. And one of the nurses once told me what each incubator cost per night. And it was just mind blowing. So I'm obviously pre-COVID, I was already kind of focused on, we have this incredible world-beating system.
It really is. It really is a world-beating service.
And why I think, coming back to what COVID did, I think hopefully everything we ever did from a restrictions point of view was always to protect the NHS. And I'm like, well, Boris is very good at saying protect the NHS.
Yeah, but do something about it.
Well, let's really protect it then. Let's talk about where we can, without just putting the cost on us, where we can get more money for them. But obviously, I'm not a politician.
Yeah. So. And going about the sort of the economy, the funding of services, we're not going to go back to, well, we don't know if we're going to go back to lockdown, but what did the lockdown do to the wider business economy, according to some of your clients, the conversations you have with businesses? What actually was the effect on those types of businesses who actually weren't able to operate during at least the first stage of lockdown anyway?
Yeah, so we have a pretty diverse client base. We were approached very quickly by many of them looking for these very well advertised payment holidays. Many of whom we had to talk to and go, well, actually, we need you to, as the banks do, demonstrate that you need it. Some businesses couldn't, and we worked with all of them. We're quite proud of the fact we didn't lose a client through lockdown. We worked with them, made sure that we could keep servicing what they could. And I know certain sectors were hit, obviously, very hard. Recruitment was a prime example. We have a couple of clients in that space who have only just managed to keep the lights on. I think some were moonlighting. I think some were delivering for Amazon at one point. But people did what they had to do.
Fascinating.
People did what they had to do, right?
I heard stories of a pilot who was delivering for Tesco's and just doing all sorts of...
A good friend of mine runs a publishing company. He's currently getting his HGV license.
Fantastic.
And he's happier now. His publishing company was already sort of going... he does a little bit on the side of that still. I think he's more of an editor now. But I had a chat with him the other day, and there was a funded scheme for the first 3 months of the 6, and now he's learning to drive a HGV. He couldn't be happier.
That's fantastic.
I think he's looking forward to it. And that's the thing. Sometimes these things, the pandemic, force people to take a step back and go, am I even happy doing what I'm doing? Or am I just doing it because it's there? Right?
Review your life so far. Yeah, that's right. It's giving an example. It's giving you some sort of time to think about.
Yeah, and obviously it was very difficult and very challenging for many of our clients and many other businesses. I think some sectors, like in any situation, some will do better than others. It's been very encouraging to see hospitality coming back with quite heavy attendance numbers for events and shortage of staff even, which obviously isn't an easy solution. Isn't a quick fix. But yeah, we had... it was weird seeing how the domino effect worked. So I'll give you an example. We had a client who did highway maintenance, and they saw business go up because the roads were empty, so they could work all week.
Oh, yeah, okay.
So they had a lot of local authority contracts. So instead of having to go, we can only work between 8 p.m. and 4 a.m. Or Saturdays and Sundays, they were out all week.
Fantastic.
So they got through a lot more work. We had a client who did commercial MOTs, and obviously no one needed to do them because they were considered in person. He nearly went to the wall. I mean, we worked with him and he didn't, but it was looking pretty hairy there for a while because suddenly no one needed to get a commercial MOT. So there was a lot of effects. The lending landscape, as we talked about, so cash advance, I'm pleasantly surprised to see cash advance lenders are still there.
Yeah.
Because their entire model was based on current and historical card sales.
That's right, yeah.
Now, businesses that were doing takeaway just about managed to keep going, but restaurants, a lot of pubs, they were doing zero turnover. So they couldn't be servicing their cash advance loans. And if they went to get one now, they wouldn't have the right historical data.
Sure.
But somehow those lenders, and I don't know how, have managed to pivot.
Yeah, I think it's fascinating how the kind of pivots that different businesses and different organizations have had to, the routes they've had to take to keep the light switched on. I think quite a few sort of catering or restaurant type businesses, they were doing, like you said, takeaway, and some I think one Rudy's Pizza.
I've never managed to get. They're on my delivery, the one in Chorlton,
Right,
and I've never managed to see them at less than an hour and a half delivery time.
is that right?
So unfortunately for them, I've never experienced.
Right,
I haven't eaten
in Rudy's Pizza. Yeah. Well, they were doing the Rudy's at home things where it was kind of like this. I think quite a few restaurants did that, where they kind of get the experience at home. So for Rudy's Pizza, they par baked, their famous sourdough pizza base, and then they had it fast frozen and then delivered to you the next day via DPD's frozen sort of delivery. And that kind of and I remember at one point we ordered a few times, and there was one point when they ran out of stock. Yeah. So clearly they were doing okay, and obviously it's enough to keep the lights.
Well, this is an interesting thing because on that point, where I live in Sale, there's a kind of one of those painter pot type businesses.
Sure.
At the end of our road, and she had builders come knock a hatch into the wall,
right? And
they started doing waffles, coffees,
right.
ice cream, and they know because the primary school's at the other end of the road.
Got you.
No, you're right. There's been reams of innovation off the back of this in that sector. Businesses that weren't on Uber Eats or Deliveroo now are. It's done great for Uber drivers. For example, Uber Eats is obviously using their driver network. Who I was in one not long ago who said, nearly went and got my accountancy qualification in the end because I almost asked him, surely you want to do that anyway? But it's been very, very, very interesting seeing how businesses adapt, and that sort of almost segues into sort of how we adapted to this, because the smaller the business, the more agile. Now we know people who worked in the banks who were waiting 3 months to get a laptop, which is insane. We packed up, I remember vividly, packed up the office on the Monday before lockdown when they'd started talking about working from home. And when I say packed up the office, I mean people folded up laptops, put them in bags,
and then went home.
And went, see you all in a few weeks.
Yeah. Oh, I remember,
a
few weeks, yeah.
And then a few weeks became obviously a lot longer. And then, but we adapted to using Teams, Zoom, all the favorites. And I think it was pretty hard. I'm not going to say it was easy. The first few weeks, me being obviously new business sort of sales director, my job is to bring stuff in. I remember thinking, what if we stop lending? Like what happens then? Because some lenders did, and some lenders will have considered it too. Thankfully, it never came to pass. We were always like, look, we still believe there's businesses we can lend to as long as we're comfortable. And we did. We I won't say we were like falling over ourselves. We were so busy, but we still did new deals.
But but with the new deals during that period, was there a tweaking criteria, or was it just business as usual, the criteria?
Business as usual. You can't change your criteria that easily, even a small lender.
Sure.
We all have somebody we account to.
Of course, yes.
From an eligibility point of view. So, I think it was more about identifying the businesses that we felt would be still viable.
Got you.
Because our criteria is, as we alluded to earlier, there's a lot of human factors in there. So as long as we were comfortable with our, written down, you can't be more than this loan to value, there must be at least one homeowner backing it with a guarantee, whatever it might be, as long as we can tick those boxes. We didn't really look too hard necessarily at bank statements and accounts because we knew they were going to be compromised by the current situation. So we took a look at it and went, well, can they service this? Can they service the debt? Can they make repayments? And if not this amount, could we do it flexibly and give them this amount?
Sure.
So there was a lot of that type of dialogue for us, which again, being sort of human underwriting type lenders, we could do that. But yeah, it wasn't easy. But no, we didn't start making exceptions to criteria. We just accepted we were going to do less deals for about a year.
Yeah, of course. And obviously the type of lending that Reparo do is very much storybook lending. It's very much understanding the business. It's not just a computer says no type criteria. It is very much understanding quite in depth, it sounds like, the motivations of the business. Why do they want the lending? What they're going to do with it? How it's going to affect their business and hopefully grow it. But what's now that we're hopefully out of the pandemic, going forwards now, what are sort of the main things that businesses need to keep on top of, they need to look out for and make sure that they're in the best possible shape? Because obviously the pandemic's affected their cash flow, balance sheet, profit and loss, all that. What are the things that they should look out for now and keep on top of to make sure that they're in the best possible shape to get the best deals?
That's something that we wish we could see more of, by the way, dialogue-wise, in the market, because it's actually a very interesting sort of question a business should ask themselves. It's like, I need money. Unfortunately, a lot of them only realize they need a loan or they need working capital when it's like days from
when they need it, right? Yeah.
So the prep time isn't always there. But so first off, go back to what I said originally. You need to know what you're looking to achieve, because it helps them conceptualize, why they're doing it, what's the benefit, and that helps them then understand cost and risk. So I always say to them, sit down and go, right, figure it out. What are you looking to achieve? In other words, why are you borrowing the money? Is it to pay off a creditor? Is it pressure from a creditor? In which case, is that creditor in a position where they could affect your ability to trade? Therefore, paying them off is really important, and speed is the main factor. Are you expanding your business? In which case, do you need it now or do you need it in 3 months? When do you actually need the money? Because you're paying interest on it. So don't borrow it today to use it in 3 months. So there's all these. So that's number one, is figure out what's the plan. And that doesn't need an accountant and it doesn't need a CFO. It just needs the business owner to go, what actually am I trying to do?
Be realistic about it, right?
Yeah. And then if someone asks me, if someone like me gets on the phone or one of my team, they can explain to us what it is they're trying to achieve. Get your information in order in advance. I would always say, grab your last 6 months bank statements, put them in a PDF. Get some recent MI if you can, age debtors and creditors if that's applicable to your business. So if you use an accounting software package, go in and grab some data out of there just to give you an idea, so you can tell someone at a glance what your turnover is, how profitable you are.
Yeah.
Because lenders work generally in bullet points. So what's your turnover? What's your? I mean, we're not a bank. We don't look at things like EBITDA, but I would never go in that in depth. But some lenders will. And get your KYC and AML in order. So that's number 3. I would search yourself as directors. Go and do a search. Subscribe to Credit Expert or whatever search you want. But yeah, I think either Experian or Equifax are the generally used agencies. Find out if there's anything on there you didn't know about.
Sure. Which happens, right?
All the time. Yeah, all the time. We do soft search, so we don't leave big footprints. But we'll often say to them like, look, something's kicked up here, and they're like, what? And they'll go and look, and they didn't know. And we'll often consider those as cases where we can still help them. Check you're on the voters roll. Check it's not impacting your score negatively. Yeah, simple stuff. So I would always treat it as like you're getting a mortgage. Do a little bit of homework at the beginning, and then when you approach lenders or brokers, you've got most of that information to hand. And then if you're a business owner looking to raise money, it's hard to find lenders direct. There's obviously the big ones who do a lot of direct marketing. So one of the things I would do is do a bit of research and find a good broker or introducer.
Interesting.
And the way I would do that if I was a business owner and starting from scratch is I would Obviously a Google search is your first port of call. You're going to get a lot of them there. A lot of them pay for the ads. Some are organic. Find the one that's got what looks to be a friendly customer journey, and then find the team and look on LinkedIn. LinkedIn's a fantastic tool for our market. We're all on there. Mm-hmm. Look for people who've got a bit of experience doing multiple types of lending. Mm-hmm. There's some fantastic brokers out there, and then there's some that are far more focused on their own.
On the commissions, things like that, yeah.
Which is fine. I mean, we all have P&L to hit, right? But those brokers, are much better served doing the transactional. Their ability to do it quickly for businesses who need it quickly, and it's a relatively small loan, and it's a high volume of those customers. They're much better suited at that. If you want to have a conversation with a broker about what are my best options, and you want to trust that they're giving you your best options, not necessarily theirs, I would be looking for somebody who's worked in lending and broking, probably at least 5 years experience.
So that's how you spot. That's how you would spot somebody who's going to look after your interests.
Yeah, I mean, I think, and don't be afraid to ask them. Say, look, if you intro me to X lender, I just want to make sure I'm getting the right deal.
Got you. Okay.
And you have to be careful because obviously some brokers do a hell of a lot of work. So again, you want to make sure that you're working with someone who is, going to help the lender get you the best option. That's what I would do. Sure. But it's hard for me to say because I've been in the industry for 20 years. So I have to almost try and forget what I already know in order to give
a lender now, yeah.
Well, yeah, to give a business owner the right answer. Obviously, going direct to lenders is an option.
You're not going to get the best deal necessarily.
It depends. I mean, the thing is, we work in a market where there are tiers of lenders. So if you're a very, very profitable, high growth business, and your bank have said no, you really need to be talking to one of the big peer-to-peers because you'll get the best deal. You'll get the cheaper deal. You'll get a 5-year term, funding circles, there's various others. And then you kind of work down from there, and lenders like us, we're not the only ones, we're sort of in the middle. We're not going to give you the cheapest money, but we certainly will help you where others might have said no. So there's all those things to consider. Know where your business is at as well. And if you're comfortable with being able to answer those questions, then yeah, by all means approach lenders direct. Here's the thing. Most business owners are too busy running their own business to start being finance brokers in their spare time. So
yeah, of course.
Let them do it for you. That's kind of what they're there for.
Sure. Great. And how did you yourself cope with the whole sort of lockdown in terms of your role? And you mentioned that you pretty much started with Reparo just before lockdown. So obviously that was pretty daunting, heading up a whole new division. And
well, I'd literally joined in the October. So 2 years ago, actually, I think my 2-year anniversary is imminent. So I joined in the October, very beginning of October, and started looking at the whole new business function, who was there at the moment, who we needed. And I think by the time I'd gone through all of the numbers and everything else, and we got Christmas out of the way, I had my first hire joining, and he joined early February. So I'd gone down and I'd hired a BDM in Bristol at one of the banks. Fantastic guy, still with us today, obviously, doing very well. He joined in February.
Wow.
Yeah, so it's all very exciting. We've got a lot of plans. What's this we keep hearing about? What? China? Italy? What? And then, that was challenging. So, but actually, we as a business were very, very. I was pleasantly surprised that my fellow board of directors were comfortable with the idea of us to continue to grow through. So, in between lockdowns or restrictions, so in between, we hired in Birmingham in the Midlands because we realised we needed to keep growing, and we understood that. Yeah, it was going to be tricky for a couple of years, but we're a profitable business. We were comfortable weathering this storm. And then just as we were about to go into our, I think, third, we hired in the Northwest as well. So we kept some recruiters busy, at least. But we did it deliberately. We were saying, look, if we're going to do this, we need to do it now.
You need to head first into it, yeah?
Yeah, you're either in it or you're not, right? You've got, at some point, you've got to just commit. And we got good people, and all of them are starting to, obviously it's not easy right now because things are still tough. And as we talked about right at the beginning, there's still a lot of business owners who aren't necessarily ready to commit to borrowing. which is restricting our whole market. Some brokers are very quiet, which means lenders can be very quiet. But we are seeing green shoots. That's the main thing. We're starting to see a higher intake of both secured and unsecured lending. So yeah, how did we cope initially? That was interesting. Working from home has been, I'm a parent, as I know you are.
You got 2 boys?
Twins, 5-year-old twins. Yeah.
Wow.
So, me and my wife, she works for the BBC. They've adapted to home working very well. So it's almost like as things open up and as we get more into doing meetings and stuff, we're almost having to remind ourselves that we have to pick up the children. Prime example, I think I was supposed to be picking them up today.
Right.
I think it was yesterday where I said, I'm doing a podcast. And she said, you're still doing pickup, are you? I was like, oh God, I forgot. So she had to move a meeting. And it's been incredibly positive on one side in terms of working from home and that culture. But then obviously our business has had to almost take a year out from our growth plans. The other thing that's happened is video calls have informalized our business quite a lot. And I mean that as an industry. I remember going to conventions and events, and it was very suited and booted in finance, a lot of bankers. And working in fintech, as I did for a stint and sort of still do, we found that the technology side of the business was much more relaxed, and that sort of led the rest of us to be. However, now we've all seen what each other look like in a t-shirt. I think we're all a bit more comfortable now. So I'll give an example. We held an event that you kindly attended last week, and everyone was pretty casual. And we told people to be, but you expect someone to still turn up in a suit.
That's right, yeah.
But everybody just came as they were, and it was, you're like, oh, we can still do deals. We don't have to, pretend to be somebody we're not. So I think there's been some positives for us.
Absolutely.
But there are still some challenges, so it's going to be interesting to see how the next, obviously, 6 months goes.
Great. Hey, Steve, thanks for coming onto the podcast.
Thank you for letting me waffle.
We've learned a lot today, and hey, all the best for the Reparo. Please tell me you've got credit cards in.
Don't worry. That was hilarious.
That was good.